Most people haven't noticed it yet. The news keeps saying the economy is strong. Jobs are up, stocks are near highs, GDP is growing, everything is supposedly fine, prosperous even. But at the exact same time, gold is breaking records, silver is surging, central banks are hoarding metal like never before, and investors around the world are quietly moving their money into something that doesn't pay dividends, doesn't produce income, and hasn't changed in thousands of years. Metal. Just metal. Which raises a very uncomfortable question. If everything is so good, why is everyone suddenly running toward gold? Because historically, gold doesn't surge when things are calm. It surges when people are scared, when trust disappears, when something is breaking behind the scenes. So why now? Why would precious metals explode during a strong economy? That doesn't make sense. And when something doesn't make sense in finance, it usually means something bigger is happening under the surface, something most people can't see yet. Today, we're going to break down what gold and silver are really telling us, because these metals don't move randomly. They're signals, warnings, like smoke before a fire. And if they're screaming this loudly, we should probably pay attention. For most of modern life, gold feels irrelevant, old-fashioned, like something pirates chased in movies. Nobody walks around paying with gold coins anymore. You use dollars, cards, apps, digital money. So gold feels useless, boring, almost pointless. Until you zoom out, way out. Because for over 5,000 years, before dollars, before banks, before governments, gold was money. Not because someone declared it money, but because humans naturally trusted it. It didn't rust, didn't decay, couldn't be printed, couldn't be faked easily. And there was only so much of it, which made it perfect, stable, reliable, honest. While currencies came and went, gold just sat there, unchanged, quiet, waiting. And every time civilizations got greedy, printed too much money, collapsed their currency, people always ran back to gold, every single time. History repeats this pattern constantly. Paper promises fail, metal survives. So when gold suddenly starts moving today, it's worth asking why. Because historically, it only wakes up when something is wrong. Now here's where things get interesting, because right now, the headlines don't scream crisis, they scream strength. Unemployment is low, stocks are high, companies are profitable. If you just looked at surface data, you'd think everything is fine, maybe even booming, which is exactly why gold's behavior is confusing. Normally, during strong growth, people want risk. They buy stocks, start businesses, chase returns. Gold usually sits quietly during those times. It's boring, safe, defensive. So it shouldn't be breaking records. But it is, which tells us something very important. Some very large, very smart money doesn't fully believe the everything is fine story. Let's talk about inflation, because this is the first crack in the illusion. Inflation sounds harmless, just prices going up a little. But what inflation really means is this: your money is shrinking every year, slowly, quietly, like a leak you don't notice until the tank is empty. 5 years ago, $100 felt like real money. Today, it disappears instantly. Groceries, gas, insurance, rent, everything costs more. And even if inflation slows, prices almost never go back down. They just rise slower, which means your dollar never recovers. It only weakens year after year. So if your money is losing value, where do you store wealth? Cash? No. Cash melts. Bonds? Risky. Stocks? Volatile. So what survives inflation historically? Gold, every time. Because gold can't be printed. It doesn't care about central banks. It doesn't multiply when politicians get desperate. Its supply barely changes. So when dollars weaken, gold usually rises to compensate. It's not that gold is getting more valuable. It's that your money is getting less valuable, which is a big difference. But inflation alone doesn't explain this surge, because there's something else happening, something even bigger. Debt. Massive, unimaginable debt. Governments today are drowning in it, trillions and trillions of dollars. And here's the uncomfortable truth. Debt only works if people trust you can pay it back. But when debt gets too big, trust fades. And when trust fades, currencies suffer. Right now, the U.S. alone owes over $39 trillion. That number is so large, it's almost meaningless, and it's growing every second. Interest payments alone are becoming enormous. Soon, the government may spend more on interest than on major programs. Think about that. Money just to service debt. Not build anything, not improve anything, just stay afloat. When investors see this, they start thinking, what happens if this becomes unsustainable? And when that thought appears, gold starts shining. Because gold doesn't depend on promises. It doesn't depend on governments paying their bills. It just exists, which makes it attractive when everything else looks shaky. And here's where it gets even more fascinating. Central banks, the same institutions that run the monetary system, are buying gold at record levels. Let that sink in. The people who literally create money are buying gold. Why would they do that? If fiat currencies were perfectly stable, why hoard metal? It's like the casino owners secretly buying insurance against their own casino. It suggests they don't fully trust the system either. Countries like China, Russia, India, and others have been stacking gold aggressively, diversifying away from the dollar, preparing, quietly, not loudly, because governments don't panic publicly, they prepare privately. And if central banks are preparing, maybe we should too. Now, let's talk about something most people ignore: psychology. Markets aren't just math, they're emotions, fear, trust, confidence. Gold is basically fear insurance. When everything feels safe, nobody wants it. When uncertainty creeps in, people suddenly want protection. And right now, even though the economy looks strong, people don't feel strong. They feel stretched, broke, insecure, living paycheck to paycheck. That disconnect matters because markets often sense problems before headlines do. Gold might be telling us something doesn't feel right, even if the news says everything is fine. Silver is even more interesting because silver isn't just money, it's industrial. Solar panels, electronics, batteries, technology, green energy. Demand for silver is exploding while supply struggles to keep up. So silver has a double effect: monetary fear plus industrial demand, which is why it sometimes moves even faster than gold. And when both metals rise together, it's rarely random. It's usually a signal, a warning, a shift. Here's the deeper idea nobody talks about. Gold rising isn't just about metals, it's about trust. When people trust the system, they hold paper. When they don't, they hold real assets. Gold is basically a trust meter, and right now, that meter is flashing, which doesn't necessarily mean collapse tomorrow, but it does mean something is off, something under the surface, something most people aren't prepared for. So what does this mean for regular people? Not panic, not sell everything, but awareness, understanding signals, because gold doesn't scream for no reason. It whispers first, then rises. Then later everyone asks, why didn't we see this coming? Just like every financial cycle before. The signs are always there. Most people just ignore them. Because at the end of the day, gold and silver aren't just metals. They're history, they're insurance, they're trust without permission. And when they surge during good times, it usually means the good times aren't as solid as they look, which is exactly why smart money pays attention. And maybe we should too. If you want more simple breakdowns of what's really happening behind the economy, subscribe to MacroEcho. because the signals are always there. You just have to know where to look. And I'll see you in the next one.